It's been a minute since my last video, and thanks for your patience. I've been up to my eyeballs playing accountant. But I'll make up for it in this nice beefy video that'll help you make your choice on the best structure to operate your small business in. So here it goes. As a Canadian taxpayer, one of the decisions you will need to make when starting a business is what structure to operate under. And the three main options are a sole proprietorship, a partnership, and an incorporated or a limited company. So today I will give you the rundown on what structure might make sense for you and why. But first, before I get started, hit that subscribe button and the notification bell. I do these kinds of videos all the time, so if you're a small business owner and you have a question, chances are I've done a video on it. So use my content and prosper, but please like and comment on this video so we can tell the fine folks at YouTube that you like this stuff and you want more of it for you and other small business owners. Okay, so by structure, I really just mean who is in business here. Is it you? Is it you and another person or a group of people? Or will it be a company? Separate from you, but owned and controlled by you. And I know that sounds very much like you, but there is a pretty significant difference. So, for your purposes, the three options just mentioned are the following. If it's just you, that is called a sole proprietorship, which makes sense. Sole, you are the lonely single soldier owning and operating the business, and you're the proprietor or the owner. And I'm guessing you've probably heard of this, but just in case you haven't. There's a partnership. There's going to be more than one owner of the business. Maybe it's a mom and pop, or maybe a colleague or a few colleagues. And then there's incorporated or limited company. And incorporated and limited here means the same thing, by the way, or at least within this context. And again, there's separation from the owner or owners under this structure. So let's start with a sole proprietorship. Legally, a sole proprietorship is you. You are the entity. Nice, eh? You're an entity, but you are the legal entity that enters into contracts. You are the one that transacts with customers. You are the one that is liable or responsible if you default on a loan or lose a civil suit for damages caused by your business. And as a result, your personal assets are exposed. If you default on a loan or get sued and lose, you can lose your house, your savings, everything. Not a big deal if you're selling baskets at a farmer's market, but if you provide skydiving services, well, there's a little bit more at stake if you're not careful with how you're operating things. So for tax purposes, the reporting is easy because it's just another schedule in your individual personal tax return called a T2125. My suggestion, now that you are in business for yourself, is that you do find a tax preparer to do your taxes. It's not going to be super expensive, but having a professional do it will save you a bunch of time and it'll get done right. Besides, you have more in your mind than getting taxes done. Now you're going to want to check with your provincial company registry bureau, or what might be called business registries or registry of joint stocks or something like that, as to fees. But likely there's very little in opening registration costs as a sole proprietor, other than if you want to operate under a different name than yours. For example, like Acme Painting. The registry will do a name search, and if the search is acceptable, you will be entitled to operate under that name, provided you continue to pay your registry joint stock fees every year. A sole proprietorship is definitely the cheapest of the three forms of structure, at least in terms of reporting and administration. However, the personal tax costs might not be the overall cheapest depending on how much money your sole proprietorship generates in earnings. You see, this is the big disadvantage to operating under sole proprietorship structure. You have no control over how much tax you will pay overall from year to year. Whatever you earn will be the amount that is reported, and the taxes will need to be paid on whatever tax brackets you stratify. And here's a link to a video I did on tax brackets and marginal taxes. It makes no difference as to whether you actually withdrew the money from your bank account or you didn't need all the money the business generated. You will be taxed on the total earnings, net earnings. So you really want to try to do the best you can to gauge how much earnings, which is determined by deducting your estimated expenses from your estimated revenues, you think you'll be able to achieve, and how much of that you need to draw to fund your cost of living expenses. And if you think you don't need it all, incorporation, which we'll talk about shortly, might make sense. Now, please don't get overly worked up over this decision. Depending on the business you are starting, there may be a good chance that your income will be low for the first or even the first couple of years. And even if it's not, there's a good chance that it doesn't generate more money than you know what to do with. So a lot of the time, when clients of mine are just starting a new business and they're struggling with whether or not to incorporate, we just take a wait and see approach and start out as a sole prop. And that's okay. As long as you have a good relationship with your accountant, they will steer you right. Now, a partnership. This is basically like a sole proprietorship, except there's more than just you in the mix. Like a sole proprietorship, all of the same liability exposures are there for partners. Now, an exception to this would be if you plan to set up a limited liability partnership. But for the purposes of this video, I'm not going to go into limited partnerships, as this is sort of out of scope to what I've seen in practice at this level of startup. Now, if you are a professional services business and plan to have a main partner or a general partner in the mix, make sure you talk to an accountant. But for the purposes of this video, I'm going to assume that you're planning like a general partnership where 2 or more people have come together to run an unincorporated business together. So you can still lose your house on this one. Tax reporting is the same. Like total partnership income and expenses are reported on a schedule of your individual tax return, and your portion will be divided out as per your agreed % partnership interest. And like a sole proprietorship, there's no control over how much tax you pay. You pay what you earn, not what you draw. Now, there are some specific additional reporting requirements that may apply, likely not at this stage. These specific instances are out of scope for this video, but I'm going to provide reference to the CRA guide in the show notes. So like a sole proprietorship, you'll register a business under the company registry of whatever jurisdiction you're in, assuming you plan to operate under a trading name. And administratively, things are pretty much the same as a sole proprietorship. You'll keep records the same way, you save receipts the same way, but one of the most important things I will suggest here is that you have a partnership agreement drafted, and you'll want to get a lawyer for this. Now, I'm going to be blunt here. A good majority of partnerships start out nice and positive and exciting, and everyone is getting along, and then things don't work out, and one or more partners want to get out or to buy out the other. So be smart about getting a good agreement in place that spells out in detail what happens under these or other situations like death of a partner. Okay, incorporated or limited companies. We talked a little bit about incorporated entities when we were discussing sole props, and I'll also put a link to another video I did on this subject. Now, in a nutshell, the very biggest reason why people will incorporate their businesses is because they hope to or are already generating more money than they need to fund the cost of their regular living expenses. And that's the big reason, to be honest. Now, secondary to this, in my experience, is liability protection. Now, this is a valid reason, but I'd like to make sure that any undue fear is managed in relation to protection against civil suits. Now, the way civil law, which you might also hear called common or tort law, is the generally accepted standards of care that we have to our customers and to our fellow citizens. And this is generally a question of judgment as to how reasonable peers in your industry would conduct themselves in order to deliver a product or service to you in a way that will not bring the customer, whether personal or financial harm. Now, this harm is called damages. Damages result as a consequence of you not meeting your duty for the standard of care acceptable in your industry. If your customer suffers damages and it's proven that your conduct caused those damages, there's usually a monetary award to your customer depending upon the courts. So there's a very quick and dirty lesson on civil law. But here's what I want you to think about, because I know this all likely sounded a little scary, but first off, you'll need to have liability insurance if you're going to go into business for yourself, and likely this will be at a minimum to like $1 million and sometimes $2 million. Now, I'm going to assume that you will do the very best you can to operate your business safely, and I'll assume that if you are providing a professional service, that you will try to deliver what you say you will, and you will do the best job you can to ensure things are correct and accurate. In other words, you'll take pride in your work, and you won't do anything super stupid. You will make mistakes, and that's going to happen, but let me paint a picture here to illustrate. Let's say you're going to own a retail shop on the main street of your town, and on an icy, snowy day, you don't salt your entryway. Now, in this case, you are exposed to liability if someone falls. Now, don't forget that the insurance that we have in place is most likely going to be adequate. And remember, a customer can only sue you for damages. So if someone slips but suffers no harm other than a little embarrassment, they won't have a case, at least not one that will provide any significant awards. But if there was harm, then you have to think about the kinds of damages your clientele could possibly suffer. For example, if your retail store is a teenage hangout, then someone slipping on your unsalted step may sprain an ankle, but will only miss out on a few shifts at McDonald's as a result. So you see, the damages wouldn't be that high. You could either put in a claim with your insurance provider or pay outside of that. You won't lose your house though. But what if your retail shop supplies high-end jewelry for the ultra-rich and Elon Musk slips on your front doorstep? Your $1 million liability policy is not going to cover the damages that this client will suffer. So incorporation in this case would have saved your house. It would have been another layer of protection for you in addition to your insurance. And I'm telling you this story because the fact is that most people watching this video will not have Elon Musk as clients. I'm sorry, and most people are gonna make sure they have controls in place to operate their business with an acceptable standard of care. It's just normally the way people run their businesses. So losing sleep over incorporating because you're afraid of losing your house is maybe not a rational fear, but reasonably taking yourself through the algorithm I just gave you and see how you feel after you've done this. If you're still fearful, get yourself incorporated or really have a good conversation with your insurance provider. Okay, now, let's assume that at this point you feel pretty informed on when to incorporate, whether it's now or down the road. What is the process to make this happen? And that's a great question. Okay, understand that incorporating a legal entity is a highly legal exercise and should be undertaken by an experienced corporate lawyer used to doing these kinds of engagements and overseen by a CPA like me, also experienced in doing these kinds of engagements. Generally speaking, lawyers will require full-blown instruction from a CPA on the steps necessary to incorporate the company. And on rare occasions, a corporate lawyer will not request this, but in my experience, this better be one hell of a seasoned corporate lawyer. I'm talking a mastery level, like 30 years plus in the business. If you don't get this sense and the lawyer doesn't ask for the CPA to be involved, you should be wary and rely on your CPA to arrange for a corporate lawyer to assist in this work. You don't have to bail on your current lawyer, but just for this particular engagement. You see, there can be and usually are some complex moving parts that come with this process, and it really depends on your particular situation. But having a good CPA and a lawyer on this will ensure things get done right and nothing bad in terms of unwanted liabilities or design flaws creep up on you in the future. Now, what kind of unforeseen liabilities or design flaws are we talking about here? Well, for one, let's say you have an existing business that you're incorporating and understand that you will be related to your new company and think of it like one of your children. Now, the CRA has this rule when you transact with a related party, like one of your children or your corporation, that you're deemed to transact at fair market value, regardless of the transaction value. So when you incorporate an existing business, this is deemed, and by deemed I mean like pretend to have happened, and if not handled correctly by a CPA and lawyer, you can create a possibly nasty tax bill for you at the date of incorporation. And that would be a pretty unintended consequence of not having a good team in place to ensure that the provisions of the Income Tax Act that alleviate the tax burden are exercised and proper clauses in the purchase and sale agreement are drafted to protect you. And lawyers or accountants that don't do this all the time, they're going to miss that. There are also GST or HST issues that can arise that accountants and lawyers can protect you from, right? You also want to make sure that your shareholder register is structured in a mindful way. So again, it's important to just get the pros to help you here and don't be tempted to scrimp on this stage, or worse yet, do it yourself. Yes, you can go online and do this stuff yourself at a fraction of the cost of having a good team do it for you, but I highly discourage you from taking this route. You will end up paying copious amounts more money in the future, either fixing the problems arising as a result of the DIY model, or worse yet, CRA tax liabilities and penalties and interest that may arise. It's just not worth it. And look, there's nothing in it for me to push a CPA and lawyer on you here. I know I'm a CPA, but I might not be your CPA and having nothing to gain by giving you best practice options here. So just listen to me, trust me. Now, costs for incorporations should be discussed with your accountant and your lawyer, and this can vary from professional to professional, but be sure you get a comprehensive quote. And I don't mean like getting them to put together a proposal. That's not what I mean. What I mean is make sure they are quoting any disbursements that will be billed alongside the incorporation fees. Disbursements like, the company registry incorporation fees or the minute book fees, stuff like that, photocopies. Sometimes in my experience, I've found lawyers are bad for this. Sorry, all my buddy lawyer friends. Sometimes they quote an engagement for their time, but they won't include the disbursements I've just mentioned, and it can come as a surprise because sometimes the disbursements are close to the same amount as the lawyer's time, and this can almost be double your expectations. So definitely ask about this. And that about does it for today's video. As you've just heard, this is a loaded subject, and I'd love to have a chat with you. Just book a meeting with the link in the show notes. Okay, get out there and change the world. Until next time.